If there was one word that defined markets in 2025, it was transformation. This year, investors navigated a market shaped by rapid technological change, shifting geopolitics, and a meaningful turn in monetary policy. And those forces drove some of the most powerful investment themes we've seen in years. At the center of it all was artificial intelligence. The AI boom went far beyond chatbots and headlines, becoming a full-scale infrastructure build-out. Capital spending surged into semiconductors, data centers, cloud computing, and the software that ties it all together. And a small group of mega-cap technology companies dominated returns, pushing the tech sector well ahead of the broader market and raising big questions about concentration, valuations, and about what comes next. Another defining theme was geopolitical fragmentation. Trade tensions, supply chain realignment, and national security concerns pushed governments and corporations to rethink where and how things are made. That translated into renewed investment in domestic manufacturing, cybersecurity, and defense, areas that benefited from reshoring efforts and rising global competition. Energy also took on new urgency in 2025. The explosive power needs of AI data centers collided with the long-term energy transition, putting a spotlight on regulated utilities, grid infrastructure, renewables, and advanced energy storage. Investors increasingly viewed energy not just as a cyclical trade, but as a critical enabler of future economic growth. Meanwhile, healthcare and longevity emerged as quiet but powerful themes. An aging global population drove interest in innovative pharmaceuticals, obesity and metabolic drugs, medical technology, and retirement-focused services, areas seen as offering durable, long-term demand regardless of the economic cycle. We also saw companies shifting focus to health and wellness, offering more natural or organic options to attract a younger, more health-conscious consumer. With U.S. large-cap stocks trading at elevated valuations, diversification also became a key strategy. Investors looked overseas, particularly to Europe, Japan, and select emerging markets, while also turning to commodities like gold, which saw record inflows, and alternative assets, including private credit and cryptocurrency ETFs, which continued to move into the financial mainstream. And finally, capital markets came back to life. As the Federal Reserve began cutting rates and economic uncertainty eased, mergers and acquisitions rebounded, IPO activity picked up in ways we haven't seen in years, and deal-making accelerated. In the end, our guests resoundingly say 2025 rewarded investors who stayed patient and diversified. Markets climbed a wall of worry, starting the year with uncertainty and ending with a broad rally across asset classes, reminding investors once again that long-term themes, not short-term noise, tend to drive the biggest opportunities.